Coming up on Market to Market, another oil pipeline company takes a run at the Midwest. Rural America waits on Washington before making last-minute purchases. And food waste finds its way into everything from compost to glass. Those stories and market analysis with Naomi Blohm next.
Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. This is the Friday, December 5 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Mike Pearson. A surge in hiring last month offered the latest evidence that the United States economy continues to improve. The Labor Department reported late this week that U.S. employers added 321,000 positions to their payrolls in November. That's the largest monthly gain in nearly 3 years. The national unemployment rate held steady at a 6-year low of 5.8%, but the pace of job growth is accelerating. Combined with upward revisions of previous estimates, Friday's tally reveals a monthly average of 241,000 new workers per month this year. And it puts 2014 on track to be the strongest year for hiring since 1999. Wall Street cheered Friday's labor report as the Dow flirted with an all-time high of 18,000. And in the wake of OPEC's announcement last week that it will not cut production, crude oil prices declined by more than $8 per barrel. The glut of oil, of course, is translating into lower prices at the pump. But getting all of the world's most heavily traded commodity to refineries is challenging. With progress on the Keystone XL pipeline stalled, Midwesterners focused on another proposal this week, an 1,100-mile project that would funnel crude from North Dakota to Illinois. The $3.78 billion Dakota Access Pipeline would transport 450,000 barrels of oil per day from the Bakken and Three Forks regions of North Dakota to southern Illinois. The new construction would tack on barely 0.04% of additional pipe to the estimated 2.6 million miles of U.S. pipeline infrastructure. Energy Transfer Partners, the company that plans to build the pipeline, held informational meetings in Iowa this week, following similar meetings earlier in North Dakota, South Dakota, and Illinois. Among the crowd were those who spoke favorably about increased energy security and the potential for 12,000 temporary and 50 permanent jobs.
You look back on some of the other huge infrastructure projects we've had go through Iowa, like they called it a superhighway when I was a kid. That's the interstate system now. And you talk about take land, I mean, that literally took land and farms from people, but you look at, are we better off now or worse for it?
Those opposing the project expressed concern over the possible use of eminent domain along the pipeline's path, as well as the potential for damage to the environment.
Iowa's too valuable when it comes to farm ground and to producing, feeding the world, and I hate to see any of that ground damaged by oil contamination.
According to officials with Energy Transfer Partners, construction is expected to begin in late 2015. A leading economic indicator for a 9-state region stretching from North Dakota to Arkansas dipped slightly last month. Creighton University reports its Mid-America Business Conditions Index declined 2.5 points in November to 51.3. Creighton economists blamed the downturn on plentiful supplies, weak global demand, and a stronger dollar, which combined are pushing agriculture and energy prices lower. Hoping to stimulate the economy, House Republicans are working on a plan to extend some temporary tax breaks that have been renewed on a year-to-year basis. If the cuts are extended again, H&R Block estimates that the move will affect 1 in 6 taxpayers, including those who live and work in the heartland. The lame duck Congress has a small window before winter recess to accomplish a lot of things that could benefit farm and ranch families. One item is the reinstatement and in some cases extension of 50 tax breaks, most of which expired in 2013. More than 40 agricultural organizations sent a letter last month asking congressional leadership to restore Section 179, which greatly impacts small businesses like farmers in their equipment purchases. As recently as 2013, producers could write off up to $500,000 in capital expenditures the year they were purchased, without having to depreciate them over time. The immediate impact of the break incentivized ranchers and farmers to invest in their businesses. The group also asked for the reinstatement of the 50% bonus depreciation for the purchase of new capital assets, including farm equipment. And the impact of the legislation could go beyond the farm gate, as some economists believe putting the tax breaks back in place could boost projected slower machinery sales in 2015. When it comes to production, America's farmers are the envy of their counterparts around the world. The Agriculture Department reports that U.S. consumers who spend less than 10% of their disposable income on food enjoy the most affordable and abundant food supply on the planet. But demand for high-quality products results in a staggering amount of waste. According to USDA, 30% of the 430 billion pounds of food produced domestically in 2010 never made it to consumers. Most of it ended up in landfills. But as they say, one man's trash is another man's treasure. And as Nebraska's NET News and Harvest Public Media's Ryan Robertson explains, dairy producers and scientists are working with food processors to repurpose America's leftovers.
Food waste is more than just the leftovers people toss out. There's waste in the creation of food as well. Some companies have found ways to reuse and recycle that waste. Take Prairieland Dairy. There's a lot of manure coming from their 1,400 cows, but that manure, combined with waste from another Nebraska food manufacturer, makes good compost. Prairieland diverts about 2,000 tons of food waste from the county landfill every year for composting. A substantial amount for an operation of this size, but not much compared to the 35 million tons of food waste that goes to landfills nationally. But diverting that food fits with their motto: don't waste anything.
The cow gives us our 3 M's, milk, meat, and manure, so we take advantage of all 3 of them.
That third M, manure, is why Prairieland started its composting program. It's the byproduct of dairy production, another kind of food waste. Composting speeds up the natural process of the breakdown and decay of organic materials. With time and a little maintenance, a nutrient-rich material is made, perfect for yards and gardens. But it takes more than manure to make good compost, which is why Prairieland adds yard and food waste to the mix.
We found out that about 85% of the stuff that goes to the landfill is compostable. So if we can just pull that stuff from our industrial sites and our grocery stores and also our school cafeterias, then we can pull that out of the landfill and reduce the landfill fill up by 85%.
To divert food from the landfill, Prairieland is partnering with one of the nation's largest food manufacturers, ConAgra Foods, based in Omaha. At ConAgra's Crunch and Munch popcorn facility in Lincoln, the kernels that don't pop up quite right, the old maids, are separated out and sent to the dairy's compost piles.
In a manufacturing environment, there are always going to be a certain level of losses, yield losses, or incidents of failure that are going to generate waste.
Gail Tavel is the Vice President of Sustainability at ConAgra. Her job includes finding where the company is wasteful and trimming the fat.
When we set our goal, it was to divert at least 75% of materials from landfill. Today we're over 90 across the board, and we have a handful of facilities that actually don't fill landfill anything. We segregate those out, put a for donation only label on them.
Tavel says ConAgra has partnerships with organizations all over the country to recycle food waste, or what she now refers to as byproducts. In a ConAgra tomato processing plant in California, Seeds and skins are being turned into highly nutritious feed for animals. Even the water in the tomato, which makes up about 80% of the fruit, is also extracted and used for irrigation in nearby fields.
It just makes sense to, recirculate that water versus having it go out of the stack in terms of steam. So it just makes sense to capture water, especially in a state that is prone to drought.
But every operation produces some waste. After all, some things just can't be eaten. Research engineer Ivan Cornejo at the Colorado School of Mines is finding different ways to utilize food waste.
The process starts by collecting food wastes from different sources. And then what we do with this, we process to extract the minerals.
Cornejo has a big idea to reduce food down to its building blocks, but he's not making compost.
I started working in the ceramic group, and then I started working more on the trash to glass concept.
You heard that right. Cornejo and his colleagues are turning trash into glass. Cornejo led the team that created Gorilla Glass, the material used to make the screen on your smartphone. And now, from his lab in Colorado, Cornejo is looking to organic waste as the mining operation of the future.
You find significant amount of silica or silicon sources from things like wheat, rice husk.
Once the food waste is reduced to minerals, Cornejo mixes the ingredients for glass and superheats them in a ceramic crucible. The process isn't ready for industrial scale, but in the lab, Cornejo can make glass with more clarity and purity than most sold on the market today. It may seem far-fetched, but Cornejo says it could be that kind of innovation that inspires the next generation.
We went to Colorado School of Mines to visit a professor named Dr. Cornejo, and he takes these food wastes and turns them into glass, and so we were helping him out by collecting these for him.
The new generation has a much better philosophy on sustainability that we have. When I was a kid, sustainability was not an issue. They find this like a very weird thing, but yet they find this very easy to understand. I think this could be the spark that is needed to revitalize the glass science and the ceramic science in this country.
Whether it's composting or mining for minerals, Cornejo says he's looking forward to the day when repurposing food waste is second nature. For Market to Market, I'm Ryan Robertson.
Next, the Market to Market report.
Grain prices rallied this week with wheat in the driver's seat. For the week, March wheat gained more than 30 cents, while the nearby corn contract moved fractionally higher. Soybeans, however, gave back all of last week's gain and then some, as the January contract lost 9 cents. Nearby meal prices followed suit, giving up more than $10 per ton. In the softs, cotton also was pressured this week as the March contract shed 39 cents per hundredweight. In the dairy market, December Class 3 milk lost 21 cents, while the deferred contract declined by 63. Livestock prices were mixed as the February cattle contract lost nearly $5. Nearby feeders improved by $4.37, and the February lean hog contract gave up nearly $4. In the financials, the euro lost 22 basis points against the dollar. Crude oil declined by a whopping $8 per barrel when last week's OPEC-induced plunge is included. COMEX gold lost $7 per ounce, and reflecting the impact of collapsing oil prices last week, the Goldman Sachs Commodity Index declined by more than 40 points to settle at 473.90. Here now to lend us her insight on these and other trends is one of our regular market analysts, Naomi Blohm. Naomi, welcome back.
Hi, thanks, Mike.
Let's jump right into this wheat market. We've been talking about this tremendous global supply of wheat, and yet this week, big spike. What happened?
Yeah, Russia happened. And so they came out and they actually said, we're going to reduce our exports. And so at first the traders thought, yeah, whatever, I'm not buying it. But then all of a sudden it became a little bit more legitimate. And their crop already had been reduced somewhat. And they're, of course, very dependent on what's happening with Ukraine to make sure that they have enough food for their people. So they actually said, no, we're really shutting it down. We're not going to do exports. And so that triggered a mass amount of short covering. blew some traders out of the water. And the market, we saw the Chicago wheat for the December contract get up towards that $6 area. So it's been a great opportunity for catch-up sales, and that's exactly what we're recommending on it because we have such a really still good supply of wheat. And with the USDA report out next week on Wednesday, we're not expected to see too much of anything in the way of surprises there in terms of supply or demand. So this has just been a great opportunity for catch-up sales.
Now, looking ahead in this wheat market, do we anticipate the trend to turn back downwards once the world adjusts to Russia's wheat being out of the market?
I would say it more will start to trade sideways now because we're now going into that seasonal tendency for the grains to rally during the winter time frame. So wheat got to have its moment of glory to be the leader this week, but now it has to take the back burner to see what corn and beans can do during the report next week. But I think they'll hold the values that they've gained, but still we're very too high priced competitively to the rest of the world. We're the most expensive wheat yet out there.
Okay. All right. Now, as we jump down and look at the corn side of things, we've had a lot of news on ethanol. The demand for ethanol staying very strong. Is that something that could help push this corn crop, this corn prices even higher?
The demand for ethanol has been constant with the gasoline prices getting lower. It's something to be watching. But the corn used in the ethanol has, of course, been such a great reason for the demand. As the exports also, past 2 weeks, we've seen very strong exports for corn, which is what's kept that market supported. Now, corn has been trading in a sideways range for about a month, where looking at the March contract, support's been at $3.75 and resistance has been at $4. And so with the USDA report out next week, if we can get any sort of a glimmer of news that's friendly out of it, and we'll absolutely be able to see some further short covering in the marketplace and see that market slowly start to grind higher, which seasonally happens at the end of December going into January. So with the market where it's been now, it's been a good point to do any catch-up sales if you needed to, yet I still feel that it's not a point to be getting more aggressive because I feel that there's more upside to come with the need to buy acres yet because corn is not competitively against beans yet, so it has to push a little higher. So I'm still a little bit friendly to corn, not like $5 corn, but
a little bit stronger than $3.94.
Right.
$3.95. Now, that being said, as we look to this next week, being a USDA week, for producers needing to make some catch-up sales or maybe get some cash flow before year end, would you sell before the report or wait and see what happens after?
I would do a little bit of both, just to be sure because it's such a good value. But at the same time, if we can get anything friendly on the report, the market is going to we'll see the futures price push higher pretty quick.
All right. Well, now, on the basis side, in the corn market across the country, has it been relatively stable? There's been, I know we shut the river down earlier this year in the northern portion. Anything else happening out there on the cash side that producers need to be wary of?
It's actually staying firm, and in some places getting firmer in places where it normally shouldn't. Reason, of course, being that the producers put their corn in the bin and they're not going to get it out until the price goes higher. So somebody's got to blink first. And so far, the end users have been the ones blinking. So the basis is getting firmer.
Great. Well, it's a pain to fire up those trucks in the
for
winter.
sure.
So, yeah, leave it in there if you can.
Yep.
Now, as we jump down and talk the soybean markets, all across the board, we saw it turn around, saw that head and shoulders formation. Talk to us a little bit about technically where we sit in this nearby soybean market.
Yeah, the beans went below $10 earlier in the week, and then they found some sell stops under the market. There was not a lot to talk about, but then we had some stronger export sales later in the week. And once the beans started to go below support on the charts, the fact that the corn and the wheat didn't follow, the beans then kind of paused and they were like, well, okay, maybe I missed something here. So with the strong export market that we had then this week, that was enough to turn the market higher. You know, great finish to the week this week, 27 cents higher in those beans. And so now we're back in that range between $10 and $10.50, and we'll probably stay there until the report next week. And on the report next week, they're actually looking for a pretty big cut in domestic carryout levels. So that'll be supportive, and but for the global numbers, they're not looking for too much of a surprise.
Now, as we look to this cut in domestic carryout, is that due to increased exports? Is that what's driving that?
Exports, and then of course also for the crushing because of all that soybean meal demand that we had of just a few weeks ago.
And now, speaking of that, we did talk a lot a couple weeks ago, as you mentioned, on that tremendous demand really supporting bean prices. Has that demand receded a little bit? Have the transportation issues sort of been worked out to the East Coast for that meal?
It has eased up a little bit, but the demand is still strong. So it's not quite the story it was before, but it's definitely something that is keeping the market supported overall.
Providing a little bit of support underneath. And now, as we sit here today, how do things look in South America?
Actually pretty good. So they had all of their beans got planted late. Everything is 3 to 4 weeks late. So, but now everything is growing all right and there's not any issues, but yet the fact that everything is planted so late, that'll of course then affect double crop later on if they can or if they can't. So far things are fine, but any weather hiccup down there coming up could be a real market mover.
All right, now you mentioned the report, we could see a carryout. So for folks, same story, looking to make some catch-up sales or get cash flow going by the end of the year, probably wait until after the report. Would that be your advice?
I would.
Friday or maybe next week?
Yes, absolutely. And then seasonally too, the beans have that tendency, that strong tendency to rally at the end of December and then all of January.
All right. Okay, well now let's jump down as we get somewhat into the livestock market. Let's talk dairy. That's a market that was tremendously high earlier in the year, and just in a month or so, it's really pulled back. Talk to us about what we've seen.
Well, we had always been talking about the dairy market being led because of the strong export demand. But we had always cautioned there's a lot of supply to back it up. This is not a supply issue, this is a demand-led market. Well, what happened is that the dollar got higher, and then the other countries in the world, and Oceania, they were able to then increase their production. Just naturally, it was able to happen, and so their competition on the world just made our market crash. It wasn't the milk so much, it's the cheese, it's the butter, it's the powder. And actually, so then when their market went lower because they had so much supply, our market had to follow. And cheddar cheese dropped 46 cents in the month of November, which is a historic, the biggest amount ever for a month. And so that was a big factor. And then comparing butter prices, earlier this year, butter was $3 a pound. Right now it's at $1.98. The rest of the world is at $1.20. So we're not done. The milk price now is between $16 to $16.50 as an average. Looking out, we were in the 20s. But unfortunately, technically speaking, there's still a little bit more wiggle room to go to the downside. Looking potentially at $14.50 from a technical perspective, because a lot of times when you have those big rallies, the market will want to do a 30% correction lower. So that 30% correction takes us to $14.50. So
roughly what sort of time frame do you see the market make that 30% adjustment? Should we anticipate it December, January, or is it a little farther removed?
I think it's going to be from now we had that big plunge, and now it's going to just be the slow grind lower. But it's setting itself up for where 2015, again, because of this huge supply of milk that we have, 2015 is getting set up for just a year of low, yucky prices.
Okay, so not a lot of exciting news on the dairy front.
Not anymore.
All right, well, let's jump into the cattle market. We saw a down week in the fat cattle market this week, down almost $5. Talk to us a little bit about what happened there.
Well, the wholesale values and the cash market dropped this week because, of course, with Thanksgiving finishing, people were not in the mood to go shopping yet for their Christmas needs. So all of that market then contributed to the futures market dropping. So we still have the market in a nice range. The uptrend is still intact. Feb cattle trading nicely between 160 and 170. We think that's going to continue. Not any new story to talk about, really. I think once the holiday demand starts to pick up, we'll see that market go back up to the higher end of the range, but nothing really new to tell in that live cattle market right now.
In the meantime, as opposed to dairy, there is a supply concern on the fat cattle side, and that's going to help provide some support.
Yes, that will always keep that long-term support there, especially, as we go into the first quarter, there's always that natural tendency for less production for first quarter, and they're expecting that, of course, this year and to a larger extent. So more reason to keep the market supported.
Okay. Now, as we move in to talk about feeder cattle, we got a question from one of our followers on Twitter. We invite everybody to follow us on Facebook and Twitter at Market to Market. Jared in Oklahoma is curious, will feeder cattle go into a spiral downward into year-end as we roll out the end of this year?
If you would have asked me that 2 weeks ago, I would have said, it maybe looks like it from the chart perspective purely, because the charts did a bearish key reversal followed by a double top, followed by a breakaway gap lower. It was like the kiss of death that you would have thought this is finally it. And then, nope, not at all. So the market goes right back up, and it just is resilient. And of course, it just goes to the fact that the feeders are in such tight supply, and the index made new all-time highs this week, and that market is just not done. If you can beat that triple threat of a technical formation like that, strongest market ever.
Now, with that being said, with that technical threat out there, should producers be putting protection in place, or do you go ahead and ride this out since we survived that technical threat?
Don't be complacent by any means. Always expect the unexpected in this market and be ready for any scenario to unfold. It's something where, would I go out and put puts in place right now or something like that? Not necessarily, but I would have absolutely the line in the sand mentally where I know I'm going to do something if the price goes below a certain point and we actually break the downtrend. So right now, do nothing. Enjoy it. Yeah.
In your mind, where would you put that price? Where would we break the downtrend on the chart side?
Well,
What
in the
should we be
short
watching
term,
for?
it's 230. So it's 230 to 240. But even if we break the 230 support area, we could probably drop to 220 before people would maybe actually get concerned. But I mean, that's significant dollars, but that's just how strong this uptrend is.
All right. Well, now let's jump in and talk hogs. The lean hog market down this week. Has PED stayed out of the press so far? Stayed out of the limelight?
Yeah, it stayed out. There have been some reports of it surfacing a little bit, but not the extent that it was at this time even a year ago. So some are thinking, well, maybe we know how to combat it better. It's not going to be as big of a deal. The immunities were passed on. It is something yet to be seen, but the market is getting sick of standing and trading sideways to wait to be seen. And in fact, the Feb futures chart looks very negative right now. And if we don't get any friendly news in this market, that we'll probably see the market drop off a very substantial amount, anywhere from 5 to 7 points. A very substantial amount just from a technical standpoint. The demand is strong, it's hanging in there, but the wholesale values have been lower and the cash market's been weaker, and so we need some friendly news pretty quick, or we might just see a technical washout.
Probably by February we see that happen.
Right. Mm-hmm.
All right. Well, Naomi, thanks so much for taking the time to be with us this weekend.
You're welcome.
That wraps up this edition of Market to Market. But we will continue our discussion and answer some of your questions in our Market Plus segment online. You'll also find audio podcasts and streaming video of our program, as well as links to our Twitter feed, Facebook page, and the rest of our social media outlets. You can stay connected with us throughout the week and get behind-the-scenes information, as well as participate in the program exclusively at the Market to Market website. And be sure to join us next week when we'll learn how farmers are growing food year-round in the heart of the Windy City. Until then, thanks for watching. I'm Mike Pearson. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com.